The Tricktrades live presentation of our free webinar on entries, exits, and targets. If you're rewatching this on the live section of my YouTube channel, I would recommend fast forwarding about 3 minutes on the clock. We're going to give people a few minutes to come in and then we're going to get right into it. So I hope you guys have all had a great day. How's everybody doing? What's shaking, folks? Yeah, Andy. Right on, guys. No, this is going to be a great presentation. We have also a couple of case studies that we're going to be going over. We're going to be taking a deep dive into psychology as well as the technicals of entries, exits, and targets. It's going to be a good one, folks. So, like I said, we are going to give it just a couple more minutes. So, again, if you're tuning in to the replay, I do suggest that you fast forward 3 minutes from the time that this started, and that will be right into this. So, and I've got a funny feeling that we may have a special guest, may or may not. No guarantees on that, but I do have a feeling that we could potentially have a potential special guest. And then if that does happen, we've got quite the special treat for you. So we will see how this all plays out. So again, if you are just joining us, we have 1 minute left and we're going to get into the presentation. Hang tight. Just want to make sure everybody has a chance to get in. I appreciate everyone being here. Everybody's day went well. We do have a storm moving in here. For those of you that don't know, I do live in the off the coast, the Guanacaste coast of Costa Rica. So this time of year, can get a little funky with weather. Okay, so we're going to get cracking here right away here, folks. Hang tight. Again, one more time, if you are just joining us on the live replay, I do suggest fast forwarding 3 minutes from the beginning. That's how much time I'm giving for people to filter in, and then we're just going to get right into it. I want to make sure nobody gets left behind in this, and we're going to rock and roll, folks. Okay, guys, welcome everyone. Welcome to the Tricktrades presentation of the free webinar on entries, exits, and targets. We're going to be taking a deep dive into not just the technicals. I'm going to show you exactly how to manage positions, how I personally manage positions, which you could definitely find useful. And we're going to be taking a deep dive into psychology as well, why traders do certain things. We're going to try and make this nice and short and sweet. We don't want a super long, drawn out webinar or people just end up dropping off. So it should be about 45 minutes long. I say that we could go a little bit longer, but let's rock and roll. So, again, welcome everyone. Thank you for being here. Let's do this. And of course, now that I press that, that's okay. We're going to get into it. So we've got quite a few things to talk about. But for those of you that may not know, my name is Pat Mitchell. I have been a professional trader for the past 11 years. I have been doing this consistently for a very long time. 11 years is a long time in this. And I'm going to quickly explain something for people that don't know. There's a major problem on social media. It is the reason why 7-8 years ago I started Tricktrades. You have a lot of people claiming they are what they simply are not. It is a percentage game. A lot of people talk about the 90% fail, 10% make it. People argue over that number all the time. It doesn't matter. That number is absolutely irrelevant. That is to gain a just bare minimal base level amount of consistency. It's not overall, okay? That is short term consistency. After that, to make it to 5 years, that goes down to 1%, 5%, sorry. After that, to make it to 10 years, a retail trader that makes it to 10 years doing this consistently for 10 years is 0.1%. Now, that can be a little scary or off-putting to traders that are getting into this, when they hear stuff like that, here's the thing. It's not that this is super difficult. We make it difficult. This is a game of true, infinite consistency and discipline. That's what it boils down to. See, a lot of people's careers, no matter what you do, even in a high stress career path, you can make mistakes and it's okay. It's not going to necessarily damage you. Your boss might look at you cross eyed, but that's about it. Here, real money is on the line. And it's not just money, it is how you provide for your family. This is why webinars like this, when you have a trader that's willing to give you this stuff for free, which is usually behind the closed doors of my service, take it in, guys. So again, my name is Pat Mitchell, 11-year professional, and I used to be a welder, a contract welder, and I needed a way out. I've told this story 1,000 times. I ended up blowing up my first 2 accounts. So if you've been down that road and you've blown up accounts, it's completely normal. Anybody that says differently is absolutely purely full of shit. That's what they are. My third account was a small amount, the little bit of money that I had left. It was about a $5,000 account. I whittled it back to about halfway. And then I had that conversation with myself that I needed to do things right. Since then, since that conversation and realizing that this, like I said a few minutes earlier, is a game of 100% infinite discipline and consistency. It cannot be about making money. This may be labeled as a profit-taking webinar. We cannot make it purely about the profits, because profits are a direct byproduct of the process. When you do things correctly, the profits will come. So we cannot focus on profits. We need to think about doing things well, trading to trade well. That is the most important thing out there, especially as a successful or want to be successful day trader. It is about doing things right. So let me show you my personal way of doing things right. Let's do this, folks. Okay, so first off, there's a few things technically that we should talk about. And these are the 3 things at a bare minimum to basically get you started. So then you execute the trade and pay yourself properly. So, first off, it is about the daily chart. That daily chart, and I'll show you why it's so important in the live analysis of today's trades. These aren't cherry pick trades. These are just 2 trades that I personally took today. There's nothing cherry picked about this. So the daily chart, that daily chart is so grossly overlooked by so many retail traders. And they get fancy with it if they do use it, or they don't use it at all. I'm going to dumb this down. I take an approach and a methodology of caveman simple. I have been saying that for the last 7-8 years running Tricktrades. And I've been doing that for 11 years. The daily chart, daily chart, daily chart, daily chart. Now, some people will argue the fact of not using the 1-minute chart. They say it happens too fast. Okay. If you think that 1 minute is a short period of time, I do have a little exercise for you. Like, if you don't use the 1 minute because you think it's just like, no, it's no good, it's not enough data coming in, you can use the 2-minute, the 3-minute, the 5-minute. Those have way too much data. A lot of this stuff happens very fast, and you're going to see things that you need to take a look at and then respond very quickly. That 1-minute chart is that sweet spot. So if you think it is way too fast, I want you to go to your nearest mirror and count, staring at yourself. And you can't cheat. You can't end it early and be like, oh, I got the point. No, it is staring into that mirror and counting from 1 to 60. See how long that is. It is a long period of time. It will feel like a lifetime. So the daily chart and the 1-minute chart, that is what I recommend to use. That is a perfect combination for day trading, for entries, exits, and targets. Now, secondly, off of that daily chart, there are key moving averages that we should be using. Now, the short period moving averages generally are the most important ones. Why? Because those are the ones that are going to be constantly worked and we can execute almost daily. It's at least weekly that we're executing a trade based off of the 5 EMA, the 9 EMA, and then a little bit longer period, the 20 SMA. People get crazy and carried away with indicators. Don't do it. It is not about being fancy on your charts. I see people's charts that look like absolute dog's breakfast. Don't do it. Keep it simple. We want to use the most basic of indicators. When you get carried away with indicators, you don't have enough people using those indicators as a buy point to help propel that stock forward or reject at that level. It is about using the absolute most common and basic indicators that are available to us as tools, as day traders. Don't get carried away with that. So I'll read off all of the indicators that I use, the moving averages that I use. 5 EMA, 9 EMA, 20 SMA, 50 SMA, 100 SMA, and 200 SMA. The 50, 100, and the 200, that's for a completely different video and possibly a webinar on moving averages. Now, some of you may be thinking, okay, well, there's not that much information on that. They're just, trust me, there is a lot of information. They all have their own singular personalities, just like you and I may differ in personalities. It is important to understand, and there is a lesson that I am going to give you about the 5 EMA and 9 EMA here in a few minutes that is going to be very important, because especially when it comes to your entries, your stops, and your profit taking, specifically with that 5 EMA. Okay. So, number 3, trade plans and pre-market preparation. Every single evening around this time, I work on my scans. Now, again, not to be repetitive, I've been doing this for over a decade, and every single evening without failure, I still prepare it in the evening. I will mark out key levels of support and resistance to get me prepared for the morning. That's the key word: prepared, preparation. If you are not prepared, you're going to be basically act like a deer caught in the headlights. It's no good. Preparation causes calmness. It is about cause and effect. What we do today will help us tomorrow. The more prepared you are, the more the market can never catch you off guard. It's one of the reasons why I have the consistency that I do. It is a consistency level that is rarely matched or met. So it's about preparation. So in the evening, doing my scans. Sure, a lot of people will make the argument, well, it's a waste of time because the market fluctuates overnight. Yeah, blah, blah, blah. It doesn't matter, because those key levels, if you do your technical analysis correctly, you're still going to be prepared. Now, whether it gets further away from that level or not, you still know that that is a level of interest for the following morning once the market opens. It's crucial and key to success. Now let's talk about the morning, the pre-market preparation. Even more important, at 9 a.m. East, every single morning, 30 minutes prior to the market open, I develop fully loaded, full-blown trade plans. And it's not just if it works. There are risk strategies involved. There are management strategies involved and contingency strategies that are involved. Like, the contingency is very important. Nobody will give you that, right? Because a lot of people don't do it. They are simply reactive in that situation instead of being prepared and knowing exactly what I'm going to do if this trade doesn't work. And it's almost like having a crystal ball. And I'm going to show you this exact thing in a few minutes in a couple of more slides. It is important. This, if you've never seen it before, is absolutely one of the sharpest tools in that toolbox that you can have. So stay tuned. So these three things are very important just moving forward. This is the bare bones, basic minimum stuff that you need to get cooking for the morning and get you prepared for the market to execute these trades. Okay. Now, the next thing is our entry strategies. Here's the problem. A lot of people get chart setups or just setups confused with strategy. In fact, this upcoming week, so about, I don't know, August 25th, 24th, 25th, 26th, I have a video about setups, not strategy, but setups. Strategy and setups are two very different things. Your strategy is your strategy. That's your bread and butter. Okay. We can use setups, whether it be a chart setup or the chart setting up. I know that sounds the same, and I know that might sound a little goofy. It isn't. It's two very different things. Chart setups are like a double bottom, a higher low, a head and shoulders, ascending wedge, all of that shit. Okay. That, yes. Do they work? Sure. But if it doesn't line up with your strategy, it's one of the reasons why you are losing in those trades. And when you execute, let's say, a double bottom or a higher low, and it fails and it doesn't work, and you're left, well, why didn't that work? Because it didn't line up with a proper strategy. It was just a setup. I see that happen all the time, guys. It's a problem. Okay. So that video is going to be coming out in a few days. Make sure you're watching for that because I'm going to tell you exactly how to line up setups with strategy. It's important. But our entry strategies, it's tools in the toolbox. First, we have our core strategy. That's number one. That doesn't change. My core strategy I have been using since I developed it a decade ago. Yes, it has evolved. Yes, it has been tweaked. It has been dialed in. Of course, I am an evolving trader. I always will have a thirst and a quest for mastery. I will always push myself to fine tune. Even the sharpest of blades can become sharper. And that's what you need to do. Don't fuck with it. Don't mess with it. Don't change things. And by change things, just because you've taken a few red trades, do not change it. It's when those red trades snowball into more, it may not even be your strategy. It might be how you are implementing and executing your strategy. It's one of the reasons on the psychology side of things, a lot of people talk about day trading psychology and they leave it very basic bitch. We need to dive deep into ourselves big time. It is about not just working on your trading, but it is about working on yourself. If you don't, no good, man. I have yet to meet a legitimate professional trader that doesn't take pride in him or herself, that doesn't have self-respect in him or herself, and so on. It is about the quest for betterment. The better you feel and the better you the more you push to feel that way, the better off your trading will be. It's the same thing as like even in school, like if you felt like shit and you went to school or at work, how did you really perform that day, right? So it's a problem. So to get back on track onto entry strategies, okay? We need to develop a strategy. That strategy is important. That never changes. My strategy will work in any market. And I've proven that now for the last 8 years running Tricktrades. It's never changed. It's always remained the same. Now, there are different types of implementation of that strategy. And there's about 3 or 4 different entry strategies, main entry strategies that I use. But the core always remains the same. And it absolutely works day in, day out. Whether the market's going up, the market's going down, the market's consolidating, bear market, bull market, whatever, it doesn't matter. That strategy needs to work. And if it doesn't, one of the reasons why a lot of traders have a hard time of letting go is ego, because it is your strategy and you worked on it for so long, they don't want to cut it loose, right? At some point, you have to realize and be honest with yourself. If it doesn't work, you need to cut it. It can be hard. Trust me, I've done this. I've worked on strategies and developed strategies that it worked in a specific market. And I thought I was like, hey, this is a banger. No, man, you got to let it go. And we're talking months and months and months and months and months of preparation and work that I had to throw in the garbage. I won't bother with a strategy if it is a short-term strategy. Like it only works in like very specific markets. The markets are cyclical and there are short cycles and long cycles. So you could make the argument that sure, yeah, you could pull that out at whatever given point. But that tells me if it only works in such a small, narrow focused market, there's no point in having it. You need to develop something else that will be broader. Because again, it is about that consistency. That's it. It's not about, short term shit. If you're only after short term, this isn't for you. This is about thinking ahead, multiple steps, not just a couple of steps, multiple steps ahead, and thinking long term. Not interested in thinking one day out or a week out. I'm thinking years out. How can I get to my goals 5 years from now, 10 years from now? That's what this is about. That's the type of thought that goes into this as a trader. And again, I don't want to scare people off, making it seem that it's bigger than what it is. It's actually less than. It's not that big of a deal. We just need to do things right. That's all. Okay. So, entry strategies. We need to develop a strategy. And here's the thing, one more topic on this, and then we're going to keep going. I've come across a lot of traders through the years that will not sign up for a service because they want to do it on their own. Okay, I'll tell you what, I signed up for one service in my entire start of my career. It was dog shit. Okay, I get it. There's a lot of stuff out there that is garbage and it will seem like a waste of time. The lessons that I learned in that service was what not to do and why it didn't work. Okay. It was garbage and it's still, it was worth the shot. Okay. But one of the reasons why people won't is because they want it to be theirs, their strategy. That is an ego thing. If I could have found someone when I first started trading, I would have been all over it, man. Like, why not have that cheat code or that hack in order to get around years of struggle? Because sometimes that's what it can take to fine tune something. So why not just get the final product in your hand? It's a very silly thought because you want it to be yours. Well, maybe yours isn't working and that's why you are watching day trading videos on YouTube. Like, do you understand? And that's not a knock. I know that can kind of sound a little condescending how that comes out. I promise you it's not meant to come out that way at all. People need to just give in. That's what they need to do. Give in, submit. It's a word people do not like to use, especially men do not like hearing the word submit. But you have to. You have to submit to the process. And then if you can find someone that actually can show you how to do this, trust me, I've looked when I first started. I couldn't find it. And it's right here. It's right here talking to you, right? So entries and your strategies for those entries is a big deal. Strategies, people talk about strategies in the worst way. They don't have a strategy, they have setup, they have nonsense, they have fluff because they're not executing that strategy consistently enough to call it a strategy. They're still doing whatever the fuck they want. It doesn't work that way. It is working that strategy and entering into that execution point, whether you want to or not. I see a lot of people say, "Oh, I didn't take that one because I knew it was going to do this or I knew it was going to do that." Bullshit. You got rewarded for piss poor discipline. That's what you got rewarded for. You didn't take the trade and it did fail, so you give yourself a fucking pat on the back. You don't know what you're talking about. That is not strategy. I've taken so many trades, members can vouch for this, where I didn't want to take it. And I'll say that out loud. I still execute it no matter what. because that is my strategy. That's how strategy works. You need to execute that trade 100% of the time. Now, it doesn't mean you need to take every single trade that triggers, but your core strategy, you have to execute that. If you're looking for an execution, you have to execute it. But that's where the contingency plans come in and strategies come in. If it doesn't work, every single trade is manageable. I can show you exactly that, and I will show you that in one of these next slides. Here we go. This is where we start getting into the nitty-gritty here, guys. So let's talk about, instead of entry strategies, and we'll talk about entries as well, but we're going to discuss the exit strategies, managing positions, and paying ourselves, because this is what we're mainly focusing on here in this webinar, is profit targets and profit taking. Okay. So we always need to take profits, pull profits into targets. It doesn't matter, and I've talked about this in all my recaps. Sometimes targets are this far away. Sometimes they're this far away. If you choose not to pay yourself into this target to override it to the next, you're doing it wrong. I call it natural movement theory. Okay. It's a method that I use, and it is like a literal crystal ball. Again, members can attest to this. I can draw out exactly what the chart will do in the next 6 moves. And generally speaking, it will do that. A lot of people say that the market, you can't predict what the market is going to do. You can. Now, I'm not talking macro, I'm talking micro. We are day traders. Number one, we need to understand what type of traders we are, correct? Well, I am a day trader looking for short-term opportunities based off of first reactions into a technical support or resistance level. I can define myself. Can you define yourself? Can you? Because if you can't, that is a problem. You need to know exactly who and what you are. Because if you don't, once that market goes live, it's probably one of the reasons why you're inconsistent. So those profits, that those targets, those initial targets are important. So now let's fire up the charts and let's talk about this. Targets are always very important. Okay. I'm going to hold that. I'm going to wait because we are going to dissect this. There are always going to be targets. So I'm going to do this instead. Give me 2 quick seconds, guys. And I'm going to draw something out. So this here is our resistance level. This here is our support level. Very straightforward. We're going to keep these very simple. So I'm going to go, and the market is going to open up here. And then that first directional pick is very important. It washes. First directional pick is down. Comes up, comes down, comes up, comes down. Okay. You execute coming into that. That's what we're doing. We are technical traders. We buy technical support and short technical resistance. Nothing fancy. When it bounces, where is your first target? Don't answer yet. I'm going to rattle off some numbers here. So this here is 1. This is 2. This is 3. This is 4. And this is 5. What number is your first profit that you should be taking? And don't copy everyone else. I want you guys to really look and answer. Now, I hope that this isn't too much of a delay in this, or else I guess we can't do this. Okay, that's not too bad. So number 1, everyone's answering number 1. What do you know? Those are all members. It's almost like they're properly trained. Okay, they are correct. So number 1 is the first area where it could possibly reject. Then it's number 2. Then it's number 3. Then it's number 4. Then it's number 5. When we execute, we cannot dictate to the market where we want to pull profit. a lot of people will execute, and I see it all the time. It's one of the reasons why the market trades how it trades. Retail traders are greedy. They will never pay themselves on the way up. They will only freak out on the way down, okay? And because they're always looking for more, they want it up here. Well, sometimes your first target is here, and you have to pay yourself. Now, I'm going to show you my entries and exits from today on two specific trades, and I'll talk about the action from today, and you'll see I practice what I preach. I pay myself exactly like this. The first area, I want you to look at it like this. If you are not a member and you're here for some knowledge and education, I want you to think about these levels, okay? The peaks and the valleys, 1 through 5 that I just drew. I want you to think of those levels as physical brick walls, a ceiling over your head. And I want you to stand in one place visually and jump right there into that. You're going to bump your head, right? It's the same thing. That's what it does. That's why the market moves how it moves. It'll come into micro support and resistance and reject or bounce. It does it all the time. And if you study what I'm talking about, there's not literally nothing that can ever catch you off guard. Like there is a certain way that this market moves. And when we know and understand that, you can essentially read the market's mind, because a lot of people look at the market like it is something different than what it is. They think it's inanimate, right? It isn't. It's a living, breathing animal with emotions, thoughts, feelings, personality, the whole nine. And that's how you have to look at this. So we need to respect it at all times. Because if you don't, right? Let me just clean this up a hair. You execute, it comes up into here, right? That first area, it can bump its head and fail. This is why I am green when most people are red on a position. Now, you can ask yourself, you stop out here, let's say, did this trade work or did it fail? It's kind of an interesting question. To me, it worked. Why? Because I'm green in the position. At that first target, I always strip out the absolute majority of my size. I am only holding small after that. Now, I have the ability to do that because I trade with size. But when you are training, you need to work on executing, paying yourself. A lot of people don't want to do that, and they want to hold longer to make money. The problem is, once you size yourself up, you don't have the muscle memory to pay yourself into those first targets. And you will hold on and you will lose, and your losses will be very big. My losses are generally, my wins are 3 times larger than my losses on any given day. Are there some trades where, yeah, they are a little bigger? Yep, it's fine. It happens. But none of my losses, if you go back and watch all of my trade recaps, they are not out of control losses. There was one that it was about a $30,000 loss. That win after on the reset trade was over 60,000. So is that okay? Yeah, it is okay, right? $30,000, it sounds like it's way out of control. That was on a trade that had a high odds probability of success. And I pressured in, pressure meaning size. It didn't work out. I'm okay with that, right? So if that sounds like a big number, I want you to take off a bunch of zeros, okay? It's like a $30 win to a $60 win, a 300 or a $30 loss to a $60 win, and so on. A $300 loss to a $600 win. It's the same thing. And you'll never see my wins and my losses out of whack like that. You won't see that because it doesn't happen. Okay. So, and that boils down to this, because I've always done it right, done it properly. no matter what, without failure. I will strip out that size coming into that first level, and then I will hold on with a very small portion that cannot damage me. Now there's certain trades where yes, if it did come down, it will be a red trade. But I'm generally working both sides of the position in a trade like that, meaning hedging. I'm going long and going short. That's why I trade options. So I have the ability to do that. Okay. That's a whole other topic. That's beyond the scope of this webinar here for this evening. But first lesson is paying yourself into that initial target. So this trade worked, right? It bounced. We paid ourselves. And whether it came down or come up, it doesn't matter. It's irrelevant. Okay. So I'm going to clear this up and we're going to go to the second part of this. So 1 sec. So now I want to talk about something that's super important. Contingency. These contingency plans, what if it doesn't work? Okay. Now we need risk strategies, and I have multiple risk strategies. I have a risk strategy called standard risk. I have a risk strategy that is based off of technicals. And then I've got a risk strategy that is based off of the relationship between distance and retracement, which is happening a lot in this market. And that one can be very uncomfortable, but it'll work. It always does. Why? Because of the relationship between distance and retracement. That's another one where if we have time, I'll get into it. I've talked about it a lot though in my trade recaps. If you go to the live section on this channel, I talk about it a lot. Go take a look. So let's talk about contingency and managing positions that are not working. This is a really important slide. Okay. We need to have the ability to do this because if you don't, you're going to get caught with your dick in your hand. So let's do this again. 1 sec. Move this up, give us some space. Okay. So we always will have a support level and a resistance level marked. These levels, by the way, that you see on the chart here, that was from today. And we will be going over these trades here in a few minutes. So let's go and let's keep with how we did the last slide, and let's talk about a long. Let's talk about whether this trade, if this trade like didn't work. Okay, so it opens up, comes down. It comes down into your entry. You enter, and it slips. Okay, what do? Well, a lot of retail traders will execute, and as soon as it breaks that level, they get out. In fact, there are very well-known top tier, let's call them top tier, day trading educators that stop out when the candle makes a new high or a new low. That is dog shit. How many times how many times you got to ask yourself, how many times have you exited a trade just to exit out right before it turns around? So standard risk comes into play with that. And that's a special one. This is contingency. And this, we take this. How often do we take this, guys? Often, right? Like this happens very often. So this is how important this is. You execute that trade. There is no bounce. That is the key to this. Because if it bounces, it's going to come into natural and you have to pay yourself. Okay. It didn't do that. It simply kept going. Where it's going to come into, let's say there's some pre-market action. It's going to come into a natural area. It's going to. It's where it's going to bottom out. Maybe, and that's generally a technical area. As it approaches, don't wait for it to completely touch. As it approaches that wash, as it washes through, you are going to add into your position. This is why you never start with a full size starter position. If you watch my recaps, you'll hear me talk about, I was in a half size starter position, quarter size starter position, full size starter position, sometimes 100, 200, 300% starter position. It's all about position sizing. Okay. So on this one, enter in, it washes, you add into the wash. Why? Because it will retrace. Let's talk about why it will retrace. This is nothing new. This is nothing fancy. This isn't wizardry. It's not complicated, but it will. With high odds of success, it will retrace. Why? Because we are technical traders and we've done our homework and we know that when support fails, it will then test as resistance, right? Support fails, disrespects that level, it will come up and it will retest. What was support will now test as resistance, period. That's what it does, guys. So if we know that it does that, not 100% of the time, there's no such thing as 100% of the time, but with a high odds success rate. So let's give it 85, 90% of the time, it will do exactly this. I will add into the wash, get out fully into that level because it'll come back and retest that. So why did I stress the word fully? Why did I just say that like a mutant 20 times in a row? Because it will then give us more information. Now, if this is a super valid support level, I'm going to clean this up. One sec, guys. I just want to make sure this is nice and clean. So let's just make it straight down. Okay. It washes. You entered, you added, it retraced. The law of averages, if you went in with 100 shares and 100 shares, your average would be here, right? Makes sense? Same with options. If you went in with one contract here, one contract there, your average would be here. This is why. That's the key. As it retraces to come back, you are green on a failed trade. It didn't work. The trade is failed, but you are green. That's how I remain green constantly and consistently, the way that I do. Most people would be red in these positions. I am not. I am green. Why? Because I will exit out of that trade fully right here. Why? Because it's going to do one of two things next. Now, I can then, if this is a super valid support level, like a really valid level that if it breaks, we're most likely going to sell off. Okay. I will then flip and I will execute that head bump. That's what I call it. I will then pay myself here. And maybe there's a technical target down here that I'm holding for a little bit. Or if this is an area, and daily chart matters. Remember when I talked about in the opener how much this daily chart matters? Well, let's take a look at here and here. Here and here. Peaks and valleys. If this was a trade, oops, sorry about that, guys. One sec. I want to get it nice and clean. So let's talk about here on this day or this area, okay? It washes. And I go long because it's as per strategy. It did not give me a pop to go short. It's extended. It's coming into some other technicals. I would love to go short, but I can't. It did not give me a short. It washed into this instead. I still have to execute, washes, add into the wash, get out fully on the retracement. What am I doing here now? Am I expecting it to remount and push and look for the execution above, or do I look for the execution below? Remember, we are at highs. What should we be looking for, folks? That's right. We are looking for the short. Why? Because we are at resistance on an extension with no retracement. That's what we're looking for. Now, it doesn't mean that this can't happen and it wants to come up a little bit further. It can, but where do the odds tell you this is going to go? It's going to come in, retest, failed support, now testing as resistance, and make a move lower. You're going to come into here, you're going to pay yourself, and you're going to keep pushing to the next support level. And that will be your main greedy target, MGT. Okay, now let's do the opposite. Now let's say it's the exact same trade, and it's down here, into support. It's right into support. There's support there, guys. So market opens up, it dips. You enter. It washes. You add, you get out. You still have to get out. Why? Because it can move lower, right? Now you wait. It will most likely take a breath, push, pull back, remount. If you get a slow, controlled pullback right here, execute that. That bitch is going higher. They stop traders out, specifically retail traders, to cause liquidity for institutions, smart money. They need to create liquidity, especially at lows. They can't just buy a bunch of shit. It'll fuck the price action right up. They need to create liquidity. They know retail traders, dumb money, will stop out the second that breaks. That's why you see a bunch of volume upon those breakages. And then it gets scooped right back up. This stuff is highly replicatable. It happens day in and day out. But the key is the daily chart. This is why a lot of people will execute a short here on a head bump, right? What I call a head bump. It's just the retest of that resistance. And then it fails. And they're wondering, well, why didn't that work? Well, because you muppet, you took it down here. It's at lows into major bloody support. Don't do that. Wait for it to come up, slice back through, pull back, remount, grab that fucking remount, work that bitch up. Easy peasy, man. And I know sometimes I can make this stuff sound very easy. The real kicker is it actually is. There's just certain things that you need to do. But long story short, when we come down, we enter, it washes that contingency. You add, you get out, and then we reassess, which will lead me now to the next thing here. One sec. Sorry, I'm all over the place. The incremental approach. Let's talk about this. What does this mean? Being an incremental trader is one of the best things that you can do for yourself. Again, so many retail traders are just greedy as hell. They want to make more money. How many times have you heard people say, well, you need to maximize your profit potential? Like that regular horseshit that you hear all the time. You hear all these fools say, it's just regurgitated bullshit. Like, that doesn't fucking cut it, man. You cannot be consistent if there is an ounce of greed in there. Now, if you have a large enough position, sure, you can hold some for those higher targets. Granted, most traders starting out don't. They're trading small positions in a small account. Okay. So what does being incremental mean? Well, I'm going to share something with you that I generally keep behind closed doors. I call it half inch, 1 inch. Now you might be talking about, what the fuck is this guy talking about? Well, let's go over it. I want you to look at, on the charts, every peak and valley you see, no matter what day it is, with exception of big dirty washes like this. But even when it bounces, it bounced that much. It bounced that much. Okay. It failed by that much. It retraced into here with how much? Every peak and valley you see. If you look at that, just generally, okay, relatively speaking, how much is that? That's 1 inch. How much is that? It's half inch. Okay. It's just a way to put it into perspective for traders. Okay. Natural targets, okay, those peaks and valleys, those lows and highs are generally going to be, when it bounces, it will pop back up to a half an inch on the chart. I know that sounds goofy. Just relax. it'll roughly be that half inch on the chart. Secondary target, like that first push into that natural level, is about a half inch, relatively speaking. Next target up is what? 1 inch, just like I drew. Half inch, 1 inch. That's crucial. Incremental trades. So now I want to draw this out for you. Okay. Now that I've explained half inch, 1 inch. So just like before, market opens, comes down, pops up. What do you have here? Half inch. What's your next target? And you're hitting 2 targets now. That's 1 inch. How much was this wash? About an inch. How much was the retracement? Half inch. If you can match what the market does, and the best way of putting this is knowing your opponent. How does your opponent move? What does he eat? What time does he sleep? It's the same thing. Okay. How does the market move on a natural day? How does he move? How does it move? Incrementally. And I'll give you a great example. When have you ever seen the market do this? Let's say we open up real high. Market opens up. It does this. Straight down. Have you ever seen that? Nope, I haven't. I've been doing this a long time. So if you know that this is what it doesn't do, what does it do? Well, a big sell-off day. Starts getting pretty fucking horny here. Quick little bounce, last bounce, trapping longs, just buying not, and remember what I'm drawing here is actually intentional. That little bounce that you see there happens all the time. They get retail traders to try and buy up before the level, especially trend, before the level. They stop it, they stall it. A lot of people think it's just shorts pulling profit, which it could be, but generally it's institutions buying it up for a minute. They'll spend $1 million to stop the sell to make 10 on the liquidity exchange. They wash it down. Now they get it into that level. They'll bounce it, drawing in more retails. It'll come down, it'll fail, and then that's the true bounce. Okay. I know that was a lot. I kind of got a little carried away there. I didn't mean to, but that's how this stuff moves. Okay. So if we know that when we are executing these trades, okay, we execute, it bounces. We need to be incremental with our approach. And I'll explain why. All of that, it's a long, long way around of explaining why. Okay. If we go long and it bounces and you paid yourself here all the way out into that, I better redraw that. Apologies, folks. Shit, getting a little ahead of myself. There. We execute, we pay ourselves fully right here, all the way out. If it's truly strong, think about this. I want you to think 1 and 2 and 3 steps ahead. If you get fully out here, and this is truly strong, what will happen? Well, remember, we're at lows on the daily chart, guys. It has to retest. This is why you'll generally see a double bottom or a higher low at lows before it comes up. It has to retest. It has to prove itself. Remember, I know my opponent like the back of my fucking hand. I know that that's what's going to happen. And you got to trust me when I'm telling you that with high odds of success will happen. So get fully out. Lock in. Let it come back down. Get another full entry. Let it come up. Pay yourself. Now you have a choice on this secondary. When you're adding in on your second, you're not going in full size, right? We've entered, we paid ourselves, we locked in $300, let's say. Okay. Let's say you, just for the sake of argument, locked in 300. You need to think about your sizing now. Now, this isn't a sizing webinar, but we'll go over a little bit because might as well. On this sizing, right, you want to make sure, because it can happen, that you execute this, it fails and stops you out. Didn't give a retracement at all, just stops you out. That you will not go red. You can draw down from that, right? It's okay, but you cannot be red on the day. Why? Because you'd be committing the most cardinal sin available, turning a beautiful green trade red. You cannot do that. Don't do that. You size appropriately to make sure you've locked in. Oops. So go half size, maybe even a little bit less. Pay yourself here, and then you hold for higher targets. That's where you can maximize your profit potential. Okay? That's when you can do that shit. But it is still being incremental. You still pay yourself there, you pay yourself there, you hold for your higher target. Incremental approach. Because, and I want to backtrack why this is so important. Again, if it is truly strong, it will give you another chance and it will come down and it will hold that, period. It's thinking into the future. It bounced the first time and you can get involved with it a second. If it's truly, truly strong, it will bounce again. Don't be afraid to take that confirmation trade, right? A lot of people forget their training when they are in these trades. And that comes from a lack of experience and a lack of knowledge. Fear is the basis of all fuck ups, all of them. People say it's fear and greed, but you can put greed in the fear category. Okay. You're afraid of going broke. You're afraid of not making money. Hence, greed. I'm talking about stripping things down to the core. The root is always fear. What is fear caused by? There's a cause of fear. It's not just fear for the sake of fear. The cause of fear is lack of education and understanding. Remember the very first time you jumped in your parents' vehicle to go for a lesson, to go get your license, the very first time behind a wheel? You were most likely, sure, excited, but there was fear there. Why? Lack of experience. Now, when you jump in your vehicle now, are you afraid? No. Why? Well, because you know the rules of the road. You know how to operate that vehicle. You know what the gas is, the brake is, right? You know what I mean? It's the same shit. So if you have something in your something that you're struggling with as a trader, it's because of, and you're fearful of it, it's a lack of knowledge and education. That's what's going on here. And you need to push harder to understand why you are fearful in that exact situation. Because if you don't, you're never going to get to the bottom of it, guys. You won't. Okay. And it's a problem. It's a major problem. A lot of people do not work on themselves and they don't fix these problems. It's an endless cycle of wiring in, blowing up, wiring in, blowing up, because you don't want to face the problem. Always boils down to fear. And fear is a cause of lack of understanding and knowledge and education. That's all it is. What I've just given you here about being an incremental trader, the contingency plan, all of that, paying into targets, it seems minor, but I'm telling you, if you implement this, this is where things can change. And I don't mean implementing when you want to, right? I talked about this earlier. I've seen so many traders in a situation, let's say up in here, right? Or maybe even up in here, you see how it's pretty extended, but you see how it still moves up, where there is a support level here. Market opens up, comes down with speed and distance into a valid support level, and they decide not to. No, it's extended. Or they're only looking for the short. Doesn't work that way. We cannot pick and choose what we take. Strategy doesn't allow that. Strategy needs to be taken. Those trades need to be taken all the time. If it triggers properly to strategy, execute. But then people get rewarded for something. They didn't take it. It comes down and it keeps coming down and you would have stopped out. So you're like, see, I told you. No, it's bullshit. You don't know that's going to happen. That is bullshit. Execute the fucking trade, period. Don't worry about those losses. Losses are going to happen. I've seen a lot, like through my years. I've trained over 40,000. At this point, it's probably more like 45,000 traders. It's a lot, right? I've got a big sample size, pool size of traders. And that's one of the things that people do to themselves the most is lie to themselves, or they give themselves a pat on the back for really piss poor behavior, because it's easy to lie to yourself in those situations and see, I was right. Like, you fucking knew that. Stop. It's hindsight. Stop. Execute as per strategy, even if you don't want to take it. A lot of people have a hard time with that. But if you do that, if you do it the right way 100% of the time, right? Can you fail? Like, that's a legitimate question here, folks. If you execute strategy, a proven strategy, 100% of the time, win, lose, or draw, can you fail? No, you can't. It doesn't work that way. It's a proven strategy. But let's say, before we get wrapping here, let's say you execute that proven strategy 60 to 70% of the time, only on the trades you want. Can you be consistent? Can you be profitable over time? Nope, you can't. I promise you, you can't. I've seen so many traders be profitable doing shit like that for a year, maybe two. They can't make it three. They certainly can't make it four. It's an issue. So these three things, these exit strategies, and there are more. I have far more exit and entry strategies than just this. This is what I'm willing to share for free. Remember, I did this on my own. These are my strategies. The way I've worked this, I've bled for this shit. A lot of people say, why don't you just give it away for free? Ask your heart surgeon when you have a heart attack to do it for free. It is the same thing. And when you get there yourself, if you did it all on your own, you will understand that. I bled for this. I damn near starved and died for this. And that's not an exaggeration. There is no hyperbole there. So those strategies, that's the way to go. So we're running a little bit long, but that's okay. We'll make this quick because I do want to show you today's trades. Okay. So hang tight. Let me get set up and we are going to rock and roll. We are just going to fucking do this. This is really good. So I don't think you guys will mind. Okay. Like I said, these levels, these are the levels, and these levels have trade plans surrounding them. Now, the first trade, the level you will not see. Oops. Let me zoom in. You see that 20 SMA right there? I'm looking, I'm right in this area here, getting your attention. There is a gray level. Right there is the 20 SMA. We opened below that. As we opened up, and I actually told members, most members did not execute this first trade for full transparency. I told them not to, okay? And there's a reason for that. At the time, as we're coming into the market open, we were opening up with no distance, okay? So I said, don't take that. We'll wait for it. We'll wait for a level test. Market opened up, it popped, it pulled back, it held for a sec, and then came back up into that. So when I saw that, I executed. Why? because I have limited risk in this situation. Okay. I've been doing this a long time and I saw exactly what I wanted to see. So I executed that. Okay. So I'm going to go over. Here are the entries. Okay. So there is my entry right there. Here are my exits. Do you see how that is a ½ inch away? That's all I wanted out of that. So now I want to show you where I paid myself on that trade. Okay. So let me clean this up. Enter here. Exit here. Do you see that right there? That little pre-market? That's all I'm looking for. Greedy target would have been there, but that's not what I wanted to do in this situation. So do you see that there? Right there. Right there. That's my target. That's where I paid myself. And as it's pushing down, I'm paying myself. So that is a great example of just ½ inch. That's all I wanted there. First trade, don't worry. Not a big deal. If you captured it, you captured it. If not, don't worry about it. We are going to test a level, and that is our true trade. Okay. So I locked in $2,275 on that. Very quick, in and out. Okay. Now, if that seems like a lot in that little bit, take a zero off. Okay. So now let's go over the main trade. Okay. The trade plan was, long story short, long here, short here upon first test. First test. Your first reactionary test into a valid support or resistance level with speed and distance, that's the fucking ticket right there. That is it. What did we get? Is that speed? Is that distance into a valid support or resistance level? Yes, yes. Okay, execute it. There is the entry. As it holds, secondary entry. This was 200 contracts, 100 in, 100 in. Where did I pay myself? You see this little bank right here? You see that? That's probably more like 3. They're just the same price point. You see that right there? Okay. Right here. It's where I paid myself. Next payment here. You see how that is natural right there? It's right here. As it comes up, I am paying myself into that. As it pushes, it's coming into resistance levels, micro resistance levels. I'm paying myself. I'm locking in. As it comes into this one, I got to draw. I have to keep moving it back and forth. I'm going to clean this up. 1 sec. There is a trend there. That's why I'm paying myself here upon test of trend. It pulls back into natural right here. You see that? That's where I entered again. This entry is a small entry. I then pay myself into that trend. Enter, pay myself. Simply stop out the rest. Done. Locking in 6,385. Now, I don't want to just read these off. When I talk about numbers, I do like to actually pull that in. The reason why I'm showing you these trades is because it is so important that the person you learn from practices what they preach. I've seen a lot of traders where they talk a big game, but their entries and exits are absolute dog shit. And it's nothing but pure emotion on that chart. I actually did a video years ago, and I'll leave her name out of it. It was a trader that popped off out of nowhere on YouTube. And I did a video because she actually made a mistake and she posted her entries charts. People will always think that it's just, oh, you're being a hater. No. As a professional, you know certain things, okay? You can see if those entries and exits make sense or if they're based off of emotions. Members can absolutely attest to this. I can tell what a member did and I call them on it before they say it out loud. And that's exactly why they did what they did. They'll tell me originally that they hesitated, and I know that they exited because it started coming back up instead of into a level. Okay. As a professional, you know certain things. And I went through her exits and entries, and they were pure emotion. There's a lot of people that learn from this person, and it really bothers me. It bothers me because those traders don't have a chance. It is the blind leading the blind. This is why it is so important that you learn from someone that has a proven track record. Been doing this a long time. Nothing's ever changed. It's important that you learn from someone like that. You don't have to learn from me, but you need to find someone that has a track record proven. I've been sharing my P&L and my trade entries day in, day out, week in, week out, month in, month out, year in, year out for years straight, years. And even when they're not shared on social media, sometimes I run out of time. They're always shared with my members, always. Transparency is important, guys. It's crucial. If you don't have transparency, like what the fuck are we doing? Who knows what the fuck that guy's doing, right? So those were the trades from today. They're not cherry pick trades. They're just trades that we take every single day. Easy peasy. So we've covered a lot on psychological barriers, like why traders do what they do. I've done lots of psychology webinars, and I'm actually thinking that the next time I do a webinar, which will be next month, I'm going to start doing these once per month. So in mid-September, it's going to be a psychology, and I'm going to give you proper psychology, not fluff bullshit, proper psychology. So that's what we're going to do there instead of going over that because we are running long. And now we're basically going to wrap this up. Okay. So there is a certain way that we need to do this, period. And I know I've stressed that point. And I think it's really important that people do what I'm telling you to do here. Okay. Now, some of you, maybe this is the very first time that you've ever seen me, or you've only seen me a couple of times. Maybe you don't know me from a hole in the ground. The one thing that people will absolutely say about me, other than I'm an asshole, is I'm not here to fuck with you at all. I wouldn't sleep at night if I fucked with you. I I want you guys to be successful probably more than you want to because I'm living it, right? Like there's something about that full freedom that people think they know what that is. It's a difficult concept to explain. I thought I knew, but now that I have it, it's hard to explain. You have to see it for yourself. So with that said, for those of you that are not, one sec here, those of you that are not Tricktrades members, there is a beautiful discount for you here. That coupon code is already loaded in. Come to tricktrades.com. The coupon code is already there, 20% off your first month. Now, like I said, you don't have to sign up. You don't. I'm not forcing people to do that, right? This is why I'm giving you this for free. And if you go onto my YouTube channel, there are 1,000 free videos, 1,000 of them, literally 1,000 of them. Come to tricktrades.com or continue with the free stuff. But remember, the free stuff is going to take you longer. It's going to take you forever to piece that shit together. And I say that all the time in my recaps. And let me explain just 2 seconds of your time. I'm going to explain why. It's because I'll do a very beginner lesson, and my next video might not be a beginner lesson. It might be an advanced lesson followed by a novice lesson, followed by an intermediate lesson, and so on. Piecing that shit together is confusing. Don't do that. We have a sizing strategy that will take you from point A to point Z right away. That's what we do. We take our job very seriously at Trick Trades. So come to tricktrades.com. I just want to say again, thank you very much for everyone coming out. I know we ran a little bit long. You guys have been great. I appreciate it. I mean, there's a lot of members that are in here right now, and they're all standing behind the product and me, and I stand behind them. So if you want to be a part of a community and actually talk with people that can help you, it's hard. We don't have anyone to talk to as traders, guys. So if you have, oh, yes, one quick note. I do not have a Discord room. There is a scammer that is scamming people. He has my name and everything else. He runs a Discord room, and then he asks you to kindly DM. That is not me. You are getting scammed. I would never ask to take 10% of your profits. It would never happen. I would never do that. Your profits are your fucking profits. So if you're dealing with that, you got to get out of there, guys. So I think I'm just going to wrap this one up. I'm going to maybe give it 2 seconds. If there's anyone that has any questions about the service, I can quickly answer. I'll wait because there's a little bit of a lag and delay here. And then if not, we're going to wrap this. We'll just give it another minute here. I don't like missing people's questions. Okay, awesome. Thanks, guys. I hope you all have a wonderful evening, and we will see you guys later. Ciao, folks. Is there a link? Yes, the link has been posted a few times. It's right there. It's right there. You betcha, man. That link will take you directly there with the coupon code already loaded in, 20% off your first month. You can't beat it, folks. I promise you, you will be happy. It will blow your mind, the level of education and knowledge that you see. Remember, this is just the free stuff I'm willing to give away, folks. Okay, guys, I hope you all have a wonderful evening. I'm going to go eat some dinner. Adios.